You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Acuna Capital. Known as the new wave in tech and trading, Acuna is a leading derivatives market maker in traditional asset classes. As one of the first trading firms to make markets on Bitcoin futures, Acuna is also proud to be an innovator in the cryptocurrency space. Through a collaborative flow of knowledge between developers, quants, and traders, Acuna designs and implements their own low-latency technologies, trading strategies, and mathematical models. To learn more about our rapidly growing firm, please visit acunacapital.com. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. New music means it's time for a new show here on the Options Insider Radio Network. Welcome to the Crypto Rundown, the program where the name pretty much says it all. We're going to break down the exploding, interesting, volatile, perhaps not as volatile as you think, but volatile world of crypto trading, Bitcoin, all the other digital assets, altcoin out there that is trading. My name is Mark Longo from the old OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. And, you guys have been asking us for the better part of a year, when are you guys going to get into crypto? When are you going to launch a crypto show? When are you going to launch a crypto show? And we really wanted to take our time with this. We wanted to look. We wanted to get a feel for the marketplace. We wanted to get a feel for the players therein. Whenever a new marketplace explodes on the scene the way crypto has, particularly here in Chicago over the past year and change, we've seen a lot of new entrants, a lot of old entrants in the space getting into crypto as well. A lot of, shall we say, less than reputable players also flying in that space as well. So we want to make sure we did our due diligence, did our homework, found good players to represent the space on the show, and also had a good show with some meat behind it to actually talk about. And we're finally there now, launching it in the new year here of 2019. We're very excited. What does this show have in store for you? Well, a lot of good stuff. We're going to model a lot of our other programming in terms of what you can expect from this show. So we'll have a great segment breaking down all of the latest trading activity in Bitcoin, as you might imagine. That's, of course, the product that's still leading the dance. That's going to cover all the things. So the coins, as well as, of course, with futures and even OTC side on the options. There aren't really any real listed options yet, but there's a lot of OTC stuff going on. And we have some good partners to help us dig into the ladder here on the program. I am pleased to be joined. He's been on the network before, but he is the first time sitting down in the old co-host seat. He is Toby Allen, the head of digital assets over there at Acuna Capital. Tony, welcome to this inaugural episode of the Crypto Rundown, sir.
Thanks, Mark. Thanks for having us, and congratulations on launching the new show. We're really excited here at Acuna to be a part of it, and we look forward to joining you from time to time.
Well, Toby, obviously, you guys have been on the network before on different programs. This is the first time kind of really holding down a specific show. Why don't you go ahead for some of our listeners? Obviously, this is going to bring a lot of new players to the mix in terms of our network who maybe aren't as familiar with the traditional option space. So why don't you go ahead and give the audience a little bit of an overview of, first off, of your background in the space, and then what the heck is Acuna? What do you guys do, and what is the digital assets desk over there do?
Sure thing. I'm going to do those questions in reverse order. But Acuna is a proprietary trading firm based out here in Chicago, specializing in trading global derivatives. We've got 4 offices now: Chicago, Boston, Sydney, Australia, Shanghai, China. Crypto is a small part of that business, a growing part of that business. Like, it's sort of growing everywhere, and we expect it to keep growing. In terms of crypto, we trade electronically across many different global exchanges in both physical and derivatives. We have an OTC desk, which you referenced a little bit ago, that is unique in that it's trading options with counterparties. And then thirdly, we have some small venture capital type investments where we think we can add value to startups in the crypto space. And then my background is as an options trader. Traded everything from energies to S&P and NASDAQ and equities, VIX, rates, but always specializing in options. So the crypto world, which is predominantly Delta One, has been unique for me, and it's been very exciting to be a part of it the last 18 months.
Well, let's get into that with a little bit of our first here, our inaugural segment for the Bitcoin Breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, welcome to this inaugural Bitcoin Breakdown segment. Again, the name kind of says it all. This is the portion of the show where we're going to break down the trading activity, usually in all things Bitcoin across the broad spectrum of products. So you're talking, the coins on the various venues there, as well as the futures and indeed the options and other things going on. Bitcoin, related Bitcoin, of course, still the majority of the market cap over there. Of course, in future shows, we'll have interview segments and guests and all kinds of other fun stuff. We'll talk about the altcoin universe as well. Don't worry if you're an Ether or a Litecoin or an XRP guy. We're not going to forget about you on the program either. But for now, for this inaugural episode, we're going to focus on Bitcoin. And actually, we're going to start the show, instead of looking ahead, looking back a little bit. We actually, Toby, I'm not sure if you're aware, but we kind of picked an auspicious day to launch this new program because we are 10 years and 1 day from the launch of, the creation really, of Bitcoin. The initial block of 50 coins, the Genesis block, was created there on January 3rd, 2009. We are recording this on the 4th of January here. 2019, that sounds so distant into the future, but 10 years and a day. And what a run it has been over the past decade. A lot of people crunching those numbers, looking at auspicious dates, including CNBC and a number of others. And looking here, 2009 was when the first ever, later that year is when the first ever Bitcoin transaction took place. Actually, it was January 9th, so about a week later. Then it was between the old Nakamoto and a software developer. Then another developer in 2010 made the first, what they believe to be the first, May 2010, the first real world transaction. This poor guy spent 10,000 Bitcoins on 2 Papa John's pizzas. So by today's math, that would be about a $30 million pizzas, $30 million worth of pizza. So I'm sure that guy kind of regrets that purchase. At the height of last year, it was worth a lot more. So he probably felt it even more. 2010 is when it started to get a lot more public attention with the launch of Mt. Gox. We all kind of know how the Mt. Gox situation ended, perhaps not the best. 2011, Bitcoin hit $1. That was a milestone at the time for pricing. But then we also saw the hacks start to emerge on venues like Mt. Gox, and that's when things started to go awry. 2014 was the big Mt. Gox hack. Bitcoin also hit 300 that year. And it pretty much stayed in that range for the better part of 3 years until, of course, 2017, I want to say last year, but it's already over last year. It's coming up on 2 years ago now, is where, of course, beginning of 2017 is really when this started to get the fever pitch for a lot of people out there in the crypto space. Bitcoin crossing again over the 1,000 level back in the beginning of the year, then hitting 2,000, so effectively doubling by July. And then, of course, we all know the trajectory went on from there, going up to almost 20,000 by December. Then a slew of new products were launched. And then we got into 2018, and the frenzy was really on. Everyone had the crypto bit in the teeth, so to speak. So, Toby, you guys obviously launched a new desk at the height of that frenzy. First off, when did you launch the digital assets desk there, and what was kind of the genesis behind it? What was really the impetus for really wanting to launch that? And then, particularly in the early frenzy days of last year with crypto, what kind of trades were you seeing going up there?
So we launched in Q3 2017, which ironically is about where prices are right now. So we saw the latter part of the big run up in 2017 that you referenced, and then in 2018 we've obviously seen the 75% plus fall in Bitcoin. I think there's a lot of coverage on how much it's fallen in 2018, and I have to keep sort of reminding myself we're now in 2019. But 2018 was a dark year for prices. But when you put it in perspective of where it was at the start of 2017, it's not quite as dark and gloomy, and I think that just speaks to sort of how much overhype and the bubble that happened in 2017, and the space certainly got ahead of itself. But we certainly here don't look at it look at 2018 as pessimistically as maybe some of the media outlets do.
Yeah, what was the? I didn't realize you launched it into late 2017. I thought you launched it in early 2018. So you're actually there for kind of the tail end of the run up, and then kind of I think the height of the frenzy, which was probably Q1 of last year, in terms of everyone and their grandmother literally hitting us up about all things crypto. What was it like making markets in the Delta One stuff? And indeed, you guys do the options as well, particularly in those go-go crazy times of, late 2017 into Q1 of 2018. What was that scene like?
Yeah, I mean, the space has come so far in 18 months. When we first got into it, we weren't in the options. We started the options in Q1 2018. But in 2017, in just the Delta One space, you had all these different exchanges with enormous fragmentation, where it was all about, not so much about trading, it was about your business operations side of having the right accounts open and being able to just move things when you wanted to, into places you wanted to. There was huge arbitrage opportunities. Markets were, entire percentage points wide. Now when you look at markets, it's more like, how many single basis points. So markets have gone from more than 100 basis points wide to less than 10 basis points wide in a little over a year in the Delta One space. In the option side of things, it's a new market, a lot of new entrants, a lot of people who the concept of options and derivatives, even futures, swaps, those kinds of things, are new to them. So understanding them and trading them is not what we're used to in the traditional asset space, and it takes a little longer to grasp payoffs and structures and how they work. And so in 2018 we saw a lot of growth in those products, but really it's a slow, educating, more steady growth pattern than what we saw in the price in 2017 and even 2018.
So would you say then it was a lot of primarily new entrants who were hitting you guys up on the options and on the Delta One desk in 2018, with people coming from the crypto world wanting to learn how to hedge, or were they players in the traditional financial space who wanted to maybe dip their toes in the crypto waters? What would you say was the primarily flow, particularly in the early days?
Yeah. The early days was a lot of speculators from the traditional asset space. So it was either hedge funds that had opened up crypto legs and understood derivative products. And then towards the tail end of 2018, we started seeing more of the businesses and people with exposure to the underlying who'd experienced, big losses or maybe just paper losses in their holdings. And, they have, if you think of something like a mining company where their revenues are derived in Bitcoin and their costs are in fiat in terms of the computers they're buying, the electricity, the rent, the wages they're paying, all those things, they started realizing or getting an appetite for hedging. And, the onset of the CME and CBOE futures and other derivative products certainly helped those real businesses in the space find ways to hedge their business exposures. And it's just taken time for people to, utilize those products that are out there.
This is why I'm glad we have this show here and you guys on to help us talk about that, because you have the actual data at hand. Because we've been asked this question so many times throughout all of 2018, and we had anecdotal answers, but nothing really, nothing empirical we could sink our teeth into. I do believe we have a listener question on a similar vein later, so I don't want to dwell too much on skew and things. I think that's what the listener wants to know a little bit later. But we've been asked a lot of times, Toby, about what were people using the options for? Was there a predominant use case, particularly coming into 2018? Bitcoin was flirting around 20,000. It was at extreme all-time valuation levels. There's a lot of speculation where people coming in, was it like the heyday, shall we say, of Apple when they were the darling of the street and every earnings, all people wanted to do was buy calls and the calls were a bit out of control? Was it all they wanted to do was hedge and or maybe get out, and so they wanted to have puts? What was the predominant use case, particularly on the options desk in those early days? Was there one, or was the flow kind of all over the place?
Yeah, the skews definitely followed the trend in the market. So early on when we launched the options, Bitcoin was at all-time highs. Volatility was much higher. Volatility, to put that in perspective, was around 150 this time last year. By the third quarter of 2018, volatility in Bitcoin was lower than 30. So to put that in perspective, VIX vol is generally sort of 80 to 100. We certainly saw a big change throughout the year. It's back up from those lows of sort of mid to high 20s to around 75 vol right now with recent moves. But I think the point you're getting at is the skew. Early on, it was all about calls. Calls were trading much higher than puts in volatility terms and relative to at the money vols. And as the year went on and we saw more and more downward pressure in the underlying, the skew flipped around. And now we describe it here like a bit of a Nike swoosh, where the at the monies are the pit of the Nike swoosh, the cheapest vol on the board, and then you have really steep puts where put vols are much higher than the at the monies and significantly so. And calls are also a little bit higher, but it's a much slower, gradual rise away from the money than those puts are.
So there you go. I always kind of thought that, but you hear a lot of arguments, for both ways, that it would look like an index with the calls being cheap and the puts being expensive because people they're primarily long and they wanted to hedge. Others, the speculators, the zealots, kind of like the Apple analogy. I kind of thought it would lean that way, and it's interesting to hear that that's kind of how it shook out, at least for the beginning of the year, until of course the downside started emerging and we started to see probably a more pronounced bid to the puts. Not surprisingly there. Of course, the downside was kind of the theme of the year for 2018, as you kind of mentioned earlier. Throughout the entire year, we saw market caps trading down. Obviously, as you see, the Bitcoin, the lead coin, going from about 20,000 down. It's hovering around the 4,000, a little bit shy of that right now. I'll have to pull up the where the futures and others are trading right now, but they were around, I think, 3,700 coming into the latter portion here of the week. There's been a lot of talk, can it sustain that 4,000 level? And it seems like it has, and it breaks through a little bit, but it seems like 4,000 is kind of where people are starting to aggregate around, at least here in the near term. Of course, a year ago, the market cap for Bitcoin alone was about almost $221 billion at the end of December. Coming into the end of December of 2018, it was about $70 billion. So it's come off quite a bit. We saw similar changes in things like Litecoin and Ether and XRP as well. We also saw volume kind of peaking in places like Coinbase out there, and they hit their peak back in fourth quarter, and Q1 about the same for both of them. Q1 2018 and fourth quarter right around, looks like about, they quoted in like notional dollar value, about 45 billion. It seems like Q1 over there in Binance was looks like about 225 billion. So running away with it there, and then kind of coming off a little bit. This data only goes to Q3, about 100 billion for Binance, and about 10 plus billion for Coinbase. I'd imagine Q4 probably somewhere in that level, but we've seen some more volatility kicking in and other things. So I wouldn't be surprised if those numbers are actually a little bit higher coming in. And of course, it hasn't all been a story of downside, like you mentioned. There's some new products on the table. Of course, a year ago, everyone was racing to launch the futures. We saw SIBO and CME launching products. SIBO launching a 1-coin future, CME launching a 5-coin future. If you had asked me which one I thought was going to lead the dance, well, I think we have a question about that too, so I won't spoil that. We'll get that a little bit as well. But surprising results there. But it's been a strong year for CME. They listed their numbers recently throughout the year. ADV, obviously, starting from zero, it's going to be a growth story, and that's pretty much what they had. They saw Q4 ADV up 120% compared to Q1, so kind of the opposite story of what everyone else had going on. But then again, of course, starting from a much lower baseline. They have a decent number of accounts actually trading. Looks like about 2,000 or so accounts. 50% about 50% of the volume coming during non-U.S. trading hours. So again, speaking to the international audience that is trading a lot of crypto. Interesting stuff. They had some records. November 20th was their record day, about 14,500 contracts, about 72,000 equivalent Bitcoins going up, or about $310 or so million worth of coins going on. So the futures representing a small number, but a growing amount there, and the open interest in the chart there is interesting as well. Do you guys do a lot of, on the digital desk, do you guys get a lot of demand? Do you do a lot in the SIBO or CME futures, or is it primarily the other products there, Toby?
Yeah, we've been involved with both those exchanges since day one when they launched, and we pride ourselves that we were early to the party there, and we participated in the very first trades on both exchanges. The majority of our business is still in that Delta One stuff in the futures, and CBOE and CME are both part of that global mix of volume. So yes, certainly.
Yeah, it has been interesting to watch that kind of that horse race play out. Again, we have some questions about that later, so I won't go down too much on that rabbit hole. But you touched on the volatility earlier, Toby. That's an interesting story. I think throughout the entirety of 2019, I got to thank our buddies Nick and the team at QuickStrike for giving us some of this data here. The narrative was Bitcoin is volatile. Bitcoin is volatile. In fact, there was even a plot, I believe, of the show Silicon Valley revolved around the notion that Bitcoin is volatile, and every time it hit a certain price level, it would trigger some really annoying death metal alarm in some guy's computer or something like that. So it was an ongoing theme of the episode. So it had reached that level of cultural saturation. It was just considered a matter of fact that Bitcoin was an extremely volatile instrument. But when you crunch the numbers, not, as you kind of alluded to them earlier, not quite as volatile as you think. Again, this data coming from our friends over there in QuickStrike land, and for the most of 2018. This is from pretty much Q1 on, so March until the end of the year. Q1's not in there, but the data is pretty much the same for that, where we see most of the volatility banded in this. And people have this perception, it's 1,000%, 10,000% volatility. Nowhere near that. It's banded for most of the year in this around 40 to the lower end. They got a little bit lower, but in most of the time in that 40 to 90% range of the volatility, with hovering most of the time around, that looks like about a low 60%, 65 or so percent vol. And with some spikes, obviously recently in Q4 in December, things got volatile, spiked up over 120, about 130%. And but we saw it also get as low as below 20% back in this is in mid-November or so, right before the vol kind of took off. We saw another move in the Bitcoin there. So Bitcoin, it's not any more volatile than of somewhat volatile equity, quite frankly. Is that kind of, like you kind of alluded to that, Toby, is that kind of your read as well, that, Bitcoin has this popular perception that it's the most volatile thing on the planet, but the reality is that it's nothing more turbulent than, your average somewhat tumultuous equity?
Yeah, exactly. I mean, for a lot of the year, as you just talked about, we saw vol less than 60 and even got as low as 20. And at that stage, the running joke in the office was, what product didn't have a lower. What product actually had a lower vol than Bitcoin when it got down into those 20s?
Yeah, to go something pretty boring, yeah.
Yeah, exactly. It really felt like a currency or an interest rate product at that stage.
Yeah, that's what's funny about it. There's so many misperceptions floating around there about Bitcoin, that it is this extremely volatile monster that will devour grandmothers and children and everything else. And you're right, and that particularly getting into Q4, into that November period, it was as boring almost as any T-bill until we started rocking and rolling again. It has the potential to do more, but obviously it can languish as well. Since we're talking vol, let's do a real quick rundown on some of the other coins too. We'll give you a little taste of the altcoin. We'll do more obviously on other shows. Ether, all you Ether heads out there, it's similar range, a little bit higher structurally from a vol perspective, looking at like the lower band around 70% and the upper band around 120%, with some peak over 140, and again the low point down in November around 30%. It looks like it's averaging around almost 196%, so a little bit more structurally volatile than Bitcoin, but not a ton. Again, to be expected, it's a much lower price. A different price instrument. XRP, of course, the Ripple, also similar deal, even more volatile. Again, a lower price instrument there. The band there is around a 90 to about 160 or so, 155%, and with some spikes. It spiked over 200% briefly in October, got down to about a low of about 85% or so. It's like back in mid-November, with the average, it looks like coming in around 120 some odd percent in that range. So a lot of that. We'll quickly touch on Litecoin too. Why not? Why exclude them? Similar story there too as well. Volatility band for most of 2018 in the around 65% on the downside, up to about 110% on the upside, with some peaks and some troughs. A trough around, it's like about 30% back in November, and about 150, close to it, percent in mid-December, and the average around, again, 90% too. So the altcoin, I should say, a little bit more structurally volatile than the Bitcoin. You guys get a lot of demand for the altcoin over there, and have you been surprised by the volatility or maybe lack thereof of those products as well, Toby?
Yeah, I mean, on the option side of things, we stick to Bitcoin and Ethereum. On the futures, forwards, physical side, we trade all those other altcoins you mentioned. We see a lot of demand in those other coins in the Delta One space, and we do often get inquiries for options in those products. It's just a lot harder once you get to smaller coins. There's more information asymmetry, and you don't really want to have a smaller liquid book around big unknown forks and those kind of things in the less established coins. So we're a little bit careful about which products we trade in the option space, but certainly in the Delta One space, we're constantly trading those things and trading them against other coins and all that kind of stuff. And yeah,
I like that. It's a good euphemistic term, information asymmetry. I like that. That's a good way to put it. Well, we touched a lot on 2018. Any other final thoughts on the year that was for Bitcoin or crypto before we get into some of the listener questions here, Toby?
No, look, I mean, I'd add a couple of things. Just that, the focus has been on the price movement this year, but I think what people need to think about, and of course these are my views, not necessarily the company's views, but that is that what's important is the underlying use cases. And when you think about something like Bitcoin, its predominant use case is as a store of wealth or transfer of wealth. And if you're going to have an instrument doing those things, then you want to see lower volatility. I think we've seen that this year. We've seen a downward trend in volatility. And then you want to see, storage or safe custody, safe storage, insurable solutions for ways people can access the asset class. And I think we've seen that too. So the underlying themes have been really strong in 2018, even if the price action hasn't.
All right, let's see if your questions are also strong with our inaugural Crypto Questions segment.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions. You guys have questions? We try to have the answers here for you. A lot of interesting stuff, a bunch here. We'll see how many we can get to. Let's start off. Toby, this has to be, I mentioned the skew one. We have that one as well later. We kind of touched on that already. But the number one question we received by far over the course of 2018 by an order of magnitude and is represented again here by user listener 77RT. They want to know the kind of magic question, when will we see Bitcoin options on an exchange? We were waiting for that. We waited for quite some time. That's one of the reasons why we delayed the launch of this show. Finally, we said the heck with them. We don't have to wait anymore. Obviously, you can already trade these things right now. Toby has just outlined that. So they do exist. They are out there ready to be traded. Why wait for CME or SIBO to get their acts together when it comes to the crypto front? But that said, this is an interesting question. I've weighed in on this before. I'm sure you have as well, Toby. But I'll give you maybe the dubious honor of going first on this one. You obviously interact with the exchanges on a regular basis. You're making markets in these products. What do you think? People are asking us now. Last year, we did a poll at this time, and we asked our audience, when do you think we'll see Bitcoin options? Everyone said Q1. I was the comparative laggard. I said Q2. Of course, the year has come and gone. We did not see them. What are you hearing? What are you seeing? What do you expect for 2019 when it comes to listed Bitcoin options? Do you have any hope for them coming online this year?
Mark, well, we would love to see them as soon as possible. The sooner the better in our eyes. As to when that is, we're not exactly sure. We haven't heard anything from either exchange. Our expectation is that it'll probably be CME before CBOE, in that CBOE's got a big technology migration with BATS going on. So CME certainly has the open door in that regard, in terms of they can probably beat CBOE to market if they want. But potentially at some stage, one of these Fridays, we need to get someone on from the CME and the CBOE and ask them ourselves.
Yeah, I've done that. We've had them on before, and I try to hold their feet to the fire. I had CME on a panel with me not too long ago at a conference here. I've held their feet to their fire on this topic on a number of occasions, both of them. And you're right, SIBO has kind of demurred with and kind of laid the blame at the feet of the technology. You notice the technology didn't stop them from launching the futures, but now it seems to be a huge stumbling block to launching the options. I can maybe see some of that. It is a little bit more tech-intensive product. But still, they raced out of the gate with the futures. Same thing with CME. They both raced each other out of the gate, and now they're both pumping the brakes. In fact, when I talk to some of the CME people, even though you're right, I definitely think they would be the first to launch it because their product has more volume and seems to be more impetus behind it right now. But they seem more interested in launching additional futures before options as well, which to me is, maybe it's just the options guy in me. It seems kind of mystifying. I want the options on the future so you could, obviously they will accrete more volume as a result, but c'est la vie. I do think we'll see some this year. I won't go out on a limb saying when, because I was wrong last year. Obviously, I think everyone was. So yeah, I do think we'll see them this year. It's just a natural progression of the asset class. But we'll probably also see maybe, and who knows, some other products, the Ether, Litecoin, those coming on as futures as well, and maybe someday even options on those. Who knows? But yeah, I still remain optimistic that we will see some of these this year, despite the kind of dragging of the feet of the two major venues right now, CME and SIBO. All right, next question. B Nunez, maybe. You want to know what's the truth about Bitcoin as an asset class? Some say crypto is digital gold and it's inversely correlated. Others say that is nonsense. Which is it? Interesting. You kind of asking two questions here, even though it sounds like one. Because you say crypto, and then I think you can make that argument certainly for Bitcoin. Bitcoin itself, all the data I've seen, maybe you have different data, Toby, but all the data I've seen is that it pretty much is uncorrelated, which is kind of what you want. If you want to, and I've seen a lot of data that it can indeed reduce your Sharpe ratio of your portfolio with an allocation to it, because it's not inversely correlated. It's not a flight to quality. It's not digital gold. It is indeed non-correlated, but you can't lump all crypto under that umbrella because there's the huge universe of it, and they're all are different things. So I think you got to tread lightly when you make that all of crypto is non-correlated, because there's coins out there that are. But Bitcoin itself, it seems like so far has proven to be fairly uncorrelated. Toby, would you concur with that it is a reasonably uncorrelated asset class?
Yeah, certainly. Looking at all the data over, I guess, 10 years, it's definitely uncorrelated. Some pessimists might argue that if it keeps heading towards zero like it has in 2018, then of course it's uncorrelated. But as long as you open up that data window, it's certainly uncorrelated.
Yeah, it's yes. Early on, obviously the narrative was, it's digital gold. Let's have a flight to quality, and then when it didn't perform that way, people were upset. But it's clearly, I think, from the data, it seems like it's fairly non-correlated, which can be a good thing. I mean, and we've seen it before. When it hits the fan, correlation goes to 1 across the board, and all these things that are supposedly, even like gold, that are supposedly not supposed to perform like that. But Bitcoin, we haven't really seen that, so that could perhaps be attractive. Here's a question we kind of touched on already. Like I said, this is probably the number 2 question we received all of last year, Toby. So we kind of have finally are able to answer it now. This comes from the surreal gentleman. I like that. That's a good handle. They ask here, I heard a lot of noise over the past year about how Bitcoin option skew would shape up if they were listed. Any idea how that skew would look? Are the calls bid? Are the puts bid? Are they both bid? So yeah, like I said, Toby, we heard arguments for call skew bid, call bid, a put bid, and a smile. You kind of touched on it. It sounds like it was pretty much all calls all the time in Q1 into Q2. Then towards the middle of the year, it started shifting. Maybe you got a little smiley, and then now it's kind of puts or bid. Is that pretty much the story of Bitcoin vol skew for 2018?
Yeah, certainly right, Mark. And I think we'd expect that to long term to continue, in that companies out there that have their revenues in Bitcoin. I used the example earlier of miners because it's a really good example, but there's as the market matures, we'd expect that people will be willing to sell upside calls where they have revenues in crypto assets and spend that premium with protection in puts. And that's what we've been seeing for a little while now, and we'll probably keep seeing. But similar to gold, that skew can easily flip. If we see a hard price run up, we'd expect it to flip to that call, just as we see in the gold markets.
I've got a question here from Ellen Kemp. I'd like to see the ladies writing in too, saying, she said, it seems like the CME Bitcoin contract won the horse race this year. Are you surprised that more people seem to prefer a 5-coin contract versus the 1-coin CBOE contract? Yeah, that I will admit that did surprise me. I think obviously the sell-off kind of helped mitigate that multiplier a little bit. It's not quite as much of a meaty beast to trade a 5-coin contract now as it was back in, let's say, Q1. So that certainly has helped. But yeah, that did surprise me. Out of the gate, I think a lot of people were picking the CBOE contract to smoke it because it was a 1-coin contract, a lot more nuanced, a lot more flexible for maybe a lot of people's needs beyond this big. At the time, it was like a 6-figure contract that $100,000 worth of coin for the CME. That was a lot. But now we've seen the exact opposite unfold over the course of the year. Did that surprise you as much as it did me and a bunch of other people, Toby?
In some regards, yes. Some regards, no. Look, like the multiplier, the 1 versus 5. Yeah, we would have expected the 1 to initially certainly be more popular. As the prices run down, that 1 versus 5 hasn't been such a big issue. But then it's not surprising in a sense that CME is a $65 billion company and CBOE is a $10 billion company. So CME at 6.5 times as big as CBOE, you'd expect it to have more global reach. And you made the point earlier that a lot of the volume's happening overnight. And I think it's, the stats on volume sort of speak to maybe CME having a wider global presence than CBOE. So in that sense, maybe not as shocking as when we first looked at it.
We'll wrap it up with this one here from Jordan, perhaps the most difficult question of them all. He or she wants to know, what's our outlook for the crypto market in 2019? We'll kind of just give a lot of looking back on the show. We can look forward a little bit now, as we kind of alluded to earlier. We've seen kind of a bit of a volume trend and market cap trend, but it seems to be maybe somewhat stabilizing here around this 4,000 high 3,800, 3,700 or so level out here in Bitcoin. Volatility certainly has shot up, and that usually does accrete to more volume as a result, certainly from that nadir of like around 20 back in November, when your T-bills were more exciting than Bitcoin for a while there from a vol perspective. So I wouldn't be surprised if we have a little bit more of that. Do you think, I mean, talking to your clients and things, are people thinking that maybe this is a relative period of stability, or are they prepping for maybe more downside? What are you hearing from the client base going forward for 2019, Toby?
Mark, I wish I knew the answer to that. I wouldn't be here on this call if I knew the answer to that. But
sure you'd be. You'd just be beaming in from your private island, but you still be on the show, of course.
Of course I would. You and I together will go to that private island when we figure out the answer to this question. You know what? I don't expect fireworks like what we saw in 2018 with 2017 with a massive price run up, and you know, I don't expect the ship to sort of keep sinking like it did in 2018. I think we will find more stable range in 2019. You know, moving away from Bitcoin, I think the space really needs to work on evolving the use cases and executing on visions. And you know, if you can develop use cases, then you can start developing revenues. You start developing revenues, you can start developing profits, and that's how we derive asset prices. So we've seen a lot of like underneath the price action. We've seen these a lot of companies in the last sort of 12 months start to work towards building those use cases and building the infrastructures that are needed. And as we see that evolve, similar to the internet age or the dot-com recovery after the crash, growth was much slower out of that crash. You didn't see a massive overnight recovery, and I don't think we'll see that in crypto either. But I'd expect that, you know, we do see some more stability in the market than what we've seen the last 2 years for sure.
All right, everybody. That music, and what music it is, by the way, I like that. What that music means, we've come to the close of our inaugural episode here of the Bitcoin Rundown, the launch episode for 2019. We have a lot of great stuff in store for you. Stay tuned. We're still figuring out the exact time, so we were hoping to get it to you this time, but we have a lot of guests coming from all over the world who are on different time frames, so we may have to adjust this time. We'll see. Maybe it might have to be just podcast only, maybe not live. We'll see if we can't make all the timing work. But stay tuned. Definitely on the podcast side, you'll be getting more episodes, and hopefully on the live side as well once we nail down a time. So for now, it's this time every week, but we'll probably have to move that once we start figuring out everyone's schedules going forward. So look for more info from us on when exactly you can expect this show. But it will be weekly, so stay tuned for that. We'll have a lot of great guests from throughout the world of crypto and a lot of great discussion topics and debates and all sorts of fun stuff. As your questions implied, you guys are still very interested in this space. We're interested in it as well. We like to see new products, new interest. I mean, it's really just revolutionized the Chicago trading scene just in the past year. So many firms have been really revitalized by this explosion of interest in crypto. So we like to see that. And I like to see the growing interest in it out there as well. So keep those questions, keep those queries coming. We do like to hear from you guys. And Toby, before we go, as this inaugural episode here, tell our folks if they're interested in what you guys are doing over there. Well, before we even get to that, give us a little hint, a little of a tease of what they can expect coming down the pike from you guys at Acuna. And then B, if they're interested in learning more, where should they go? What should they do? Yeah,
sure, Mark. Look, we're really excited to be part of the podcast, the radio network. We're looking forward to discussing the latest in crypto markets most weeks, and talking to some interesting guests from all over the crypto space, and of course answering listener questions. For those listeners out there that are interested in Acuna and what we're up to, www.acunacapital.com. And there's a few different links there depending on what exactly they're looking for and ways they can get in touch with us.
There you go, and that's Acuna with a K, listeners, AKUNA capital.com. Find them on Twitter over there as well at Acuna Capital. And on behalf of Toby and the team over there, and indeed myself, I want to thank all of you for tuning in to this inaugural episode. We're looking forward to nailing down a firm time for you guys and putting out some great episodes coming from the Crypto Rundown in the coming weeks.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.